Well, hi there, Jeff Slakey from the Alderbrook Resort for the Affordable Workforce Housing Summit put on by Peninsula Credit Union and other great organizations around the community. I'm sitting now with Sharee Adkins, the Executive Director of the Northwest Credit Union Foundation. Hi, Sharee. How are you?
I'm doing all right. How are you?
I'm well, thanks for sitting with me a little bit to talk about affordable workforce housing. How does the Northwest Credit Union Foundation find itself involved with this today?
Yeah, absolutely. So, we work with and through credit unions across the Pacific Northwest. So the Northwest Credit Union Foundation works in Idaho, Oregon, and Washington in rural communities and urban communities. And really, I think the conversations that we've been having over the past few years as it relates to what credit unions are doing in their community, it keeps coming up, this topic of workforce housing. And so about a little over a year ago, we decided that the foundation would sort of put a stake in the ground and say, we're going to put a huge focus on this. We're going to get out into the communities that we serve and the credit unions that we work with and figure out what we can do to help break down barriers and provide support. And so I think one of the things that we've really figured out in that short time over the past year is that there are credit unions across the Pacific Northwest that are doing exceptional work, that are starting down this path of asking what can they be doing more of as it relates to workforce housing. And it's been great to be in the role that we're in because we get to sit at that table and say, where are the barriers and what can we do to help break down those barriers? And we're getting great responses, a lot of barriers, a lot of challenges with figuring out what to do around workforce housing. So we're excited to be at the table.
So is the foundation then kind of a liaison between government agencies to talk about the different barriers that people are facing when it comes to either finding these types of housings, getting permits built through the workforce or the builders sections, or even the affordability for these types of housing for the credit union members?
That's a great question, and I think we're more on the side of on consumers and credit union members. And so, I like to think about, like as an example, we currently have a pilot project that we're doing with some credit unions down in Oregon where we provide loan loss reserve funds. So they've all come up with this commitment of loan funds and said, we're going to make these specific kind of loans. They're riskier loans than what you would typically make. And so we've come in and said, okay, well, we'll set aside these funds so that if you have losses on those loans, we can step in and help mitigate that loss for your credit union. So it's, in sort of that way, and those are security deposit loans. So you think about renters, and when they're moving from one rental to another, having to come up with first and last month's rent plus a security deposit, that's a significant amount of money. So how can we help ease that transition from one place to the next by providing those loans as an example. But I think when we look at what credit unions are doing in this space, we see a lot of folks operating in the sort of market rate rental, market rate mortgages. And what we're trying to do with workforce housing is take those services and products and existing competencies as financial institutions that are based in their communities and help just sort of scoot them just a little bit further down that spectrum, right? So that they're using existing competencies and products and services, but to help more and different people.
Are the credit unions able to offer different loan percentage rates and things like that to help incentivize the builders who may be looking to come into a community?
I think it's tricky working with builders and on the, even especially when you get into like multifamily housing, because some of those loans are so huge, right? And I think that's one of the biggest challenges in a community like Mason County is how do you find, and I think we've heard that already today at the summit, how do you find the capital? Credit unions are oftentimes smaller community-based financial institutions that themselves don't have that much capital for those multifamily housing projects. But I think one of the things that I'm encouraged by is that we have a lot of credit unions, particularly in Washington, who are sitting down at the table together and saying, we may not have the ability to take this on all by ourselves, but what can we do together, right? What can these 5 credit unions do if they come together and fund a project or work towards something? So I think on the builder side, we do have to think outside the box a bit more. But I do think that that's what it's going to take to get into communities like Mason County. We aren't necessarily talking about a 500 unit housing complex, right? We might be talking about something that houses 10 families or, and I think that becomes more doable. on the builder side. And I think thinking about things like the modular homes, the prefabricated in a factory, brought out, thinking about ADUs, just, alternative to the traditional thinking about what a housing product is. I think there's a ton of opportunity there for credit unions to be in that space and financing in that space.
What is it about credit unions that seem to be willing to work with other credit unions and other partners like that?
Yeah, so credit unions are member-owned cooperatives, and I think so many of them have their roots in the community and understand their community because they're part of it. I think the fact that they're cooperatives means that they're living daily those cooperative principles, and that really does mean cooperation amongst cooperatives and supporting community and members. And so I think that just makes them really unique in that they're trying to help their community, trying to help their members, but understand that sometimes that takes cooperation between credit unions too. So.
What have you heard, or any stories that you can share about kind of the upward mobility of some of your members who have moved from the lower spectrum of the housing scale into affordable workforce housing, and then maybe even up past that?
Sure. I mean, and I think that story is a story that takes a long time, right? So that is not a thing that happens overnight. And one of the, I think, the key pieces of working with credit unions around this space is that everything that they do comes from the asset building perspective as well, right? So what are we doing to help members build a habit of savings, right? Or increase their understanding of certain budgeting concepts, or things like what we were talking about before we came on here, financial reality fairs that help high school students understand what it's going to take when they get out into the real world to manage a monthly budget. I think those are small pieces, but critically important pieces that when you can couple that with like a mortgage, a first-time homebuyer program, help a family build its assets, and they might not have been able to otherwise. And so I think of a story, and this is from, I will confess, outside the Pacific Northwest, but it was one of the original stories that got the foundation sort of excited about the potential for what credit unions could do. Down in El Paso, there was a credit union that was working to, over the long term, help people who were using a VITA program, which is volunteer income tax preparation. So for people who qualify, people who for free will prepare their taxes for them. And oftentimes folks who are eligible for that program get the earned income tax credit. So helping people with their earned income tax credit refund, put that into a savings account. And it's a long game, right? So do that 3 years in a row, and then all of a sudden you've been building your credit through other things, through other financial education programs. You've been building your savings through this earned income tax credit money that you're putting into a decent yield savings account, and you're just kind of building everything around that family's ability to then qualify for potential first-time homebuyer incentive programs, right? So there are a lot of match funding programs out there across the various states, and you line those things up and then get a family into a home that they purchase for themselves, and that's an asset that they didn't have before that becomes an asset for their generation. And then you look at the statistics around the impact that has on further generations. I think then you start to see the cycle of poverty break for folks, and but it's a long game. That's a long game. So
is there the gumption? Is there the desire, do you feel, for people to play this long game? I know we mentioned that sometimes somebody has to be the first one to step out there and put themselves out in front of the situation. And if you're looking generationally, perhaps folks may not be entirely enticed to jump into this.
Yeah, I think that's a great point, and I think it in some ways is helping people see that there is a potential for that opportunity down the road. Because with the long game, I think oftentimes programs that are intended to help people in those situations don't pan out, right, and don't help people. And I think as a financial institution, credit unions are there to support their members and have this longer game relationship with their members. They're a trusted financial institution, and they're doing that work day in and day out. And so I think there's a lot of opportunity there for that trust to already be in place that can then you can build on that, right? And you aren't trying to sell them
Sure.
on something.
Sure.
But I do, I also think, I think there are a lot of other challenges out in the community just around people's perceptions about what housing looks like and what housing opportunities there are. Some families may not want to be homeowners. That may never be in the cards for them, and that's okay. And so I think trying to think about what, as a community, we can do to support all types of residents and all types of housing, and helping people meet their housing needs in ways that do help them build their assets, even if it isn't through home ownership. There are a lot of opportunities out there to help people just get financially stable and then get money in savings and, and build steps elsewhere too.
Take those steps.
So, yeah.
Sharee Adkins is the Executive Director of the Northwest Credit Union Foundation. Thank you so much for being with me.
Thanks for having me.